Good afternoon, traders and investors. The Fed has pivoted officially and the Dow Jones has hit all-time highs. What's up, everybody? It's Will back here with another one. Hope you guys are doing very well after today. Markets on an absolute tear. Markets were fairly muted before the Federal Reserve came out and had a pause on interest rates. Now, the last three meetings have resulted in no change in the interest rates, but the summary of economic projections, the dot plot, which we were expecting to potentially be revised down, has indeed been revised down. So a lot to cover here today, guys. We are going to cover the FOMC results, the Federal Reserve statement, and the dot plot. We are also going to go over ADOBE earnings. They came over after the close. And as usual, go through our major indexes, our major tech names, and lastly, take a glimpse into my portfolio, see how we're doing in the middle of this week, guys. Without further ado, let's get right into it. SPY up 1.38%, QQQ up 1.27%, and everything extremely bullish. Look at this Russell down here, 3.4%. I will remind you guys that most of the markets were flat leading into the Federal Reserve decision, and look at these massive pops coming out of it, guys. Absolutely beautiful stuff. We are going to cover the technicals a bit later. Without further ado, let's get right into our market breadth here. So market breadth, absolutely amazing, guys. Everything pretty much going up. Adobe slightly down before their earnings and came down during their earnings as well. We'll take a look at that. Healthcare looking very, very good. Everything except for Pfizer. Financials looking absolutely amazing. Very, very, very good broad market performance across the board as everything kind of had a late day rally after the Federal Reserve meeting. And on the one day relative, you will see that everything in the green, even energy, which has been kind of trailing behind on the 1 week relative, everything now in healthy percentage gains here as we continue the rally to all-time highs. And on the 1 month relative performance here, guys, a few things have cracked double-digit territory: real estate and utilities. And this should be a no-brainer. As of the last month, guys, right? The yields have been coming down. So the speculation around the 10 and 20-year yields have been coming down. Those are the interest rates that investors could lock in on a long-term basis and kind of stay risk-free, gaining about 5.25% per year. And now that the rates have been coming down steadily over the past month or so, you can see this here, most notably in the 10-year yield. Look, brought down all the way from 5% all the way down to pretty much 4%. The 20-year yield is also down significantly here, down from 5.38% all the way down to 4.3. So about 1.5% worth of drop. Well, it's very normal that sectors that are heavily dependent on interest rates are coming down, right? These two sectors are where investors usually would park their money to gain steady dividends anywhere between 3 to 5%, right? So now that a bit of the money has been rolling into the bond market, taking yields off their tops, well, investors have been pivoting back into real estate and utilities as they represent now an attractive potential buy now that interest rates are coming down. So let's get right into the Fed minutes, guys. What exactly was said today that made the markets rally in a substantial way? Well, Fed holds rates steady, indicates 3 cuts coming in 2024. And just before getting into this, guys, Jerome Powell on the statement today has been the most bullish that I've seen him pretty much in the last 1.5 to 2 years. Before, he refused to acknowledge any discussion about rate cuts whatsoever, and today he actually got into discussions about rate cuts, not only mentioning them, but even going so far as to say that the Fed was very pleased with the results that they've been seeing in inflation. They're very pleased with the fact that the economy has been coming down, even though growth in GDP is still good, still positive, that he is happy with the economy cooling down. So inflation is coming down, the economy is cooling down, and he's also happy about the fact that even though the jobs market is still healthy, the jobs market is coming back into balance, meaning that the demand and the supply for jobs is coming back into balance, resulting in less open job positions here and less month-over-month job growth. So the jobs market is less hot. So that means that he's potentially ready to bring interest rates down next year. I'll remind you guys, the dual mandate, bringing inflation down, which they've been doing good by keeping rates higher, but also keeping the job market healthy, right? Full employment is their second mandate. And you can only get full employment, guys, if the economy isn't squeezed too much by high interest rates. So very possible he brings the rates down over the course of next year. And that was what we saw in the dot plot. We'll get into that as well here, guys. So right? So along with the decision to stay on hold for current rates, committee members penciled in at least 3 rate cuts in 2024, assuming quarter percentage point increments. So 3 rate cuts of 0.25%. That's less than the market pricing of 4, but more aggressive than what officials had previously indicated. Officials were previously indicating 2. So the bullish case was 4 potential rate cuts. Officials were pricing in at least 2, but we did get potential for 3. So very, very good. You can see the federal funds target rate has remained unchanged here for the better part of the last quarter, still between 5.25% and 5.5%, and that will be coming down into 2024. So very, very good. A possible nod that hikes are over. This Federal Reserve statement said that the committee would take multiple factors into account for any more policy tightening, a word that had not appeared previously. So this was a big fact. We even got a question on it by one of our reporters. What does the word any mean? Does it mean that you guys are satisfied? And that's pretty much what Jerome Powell hinted at. He said that any more could potentially be overshooting. So he mentioned that for the first time, he doesn't want to overshoot by overcorrecting, keeping rates too high for too long, and that he will begin the cut cycle prior to inflation being back down at 2%. So he wants to jump the gun a little bit. He's not going to start cutting only when inflation hits 2%. He wants to get a little bit of a head start. So very, very, very good here. Inflation eased over the past year. That's exactly what I've been saying. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. So he said we're in a very nice situation, guys, that usually, traditionally, when inflation is high and whatnot, and you start increasing interest rates very, very aggressively, it could lead to high unemployment. This has not happened this time. So that's what Jerome Powell was echoing as well. You can see the federal funds rate increases since 2022, right? You can see that September, November, and December, we have no rate increases. So basically the Fed has paused, and now we are pricing in 3 rate decreases for next year. So very, very good. In the news conference, Powell said recent indicators suggest that growth in economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole. So that is very, very good, guys. Everything is coming into line exactly as predicted, right? Inflation is coming down. The economy is slowing down, which means that people are spending less money, which keeps inflation on the downtrend here, but it's not slowing down so much that the economy is stagnating. So this is very good news. And lastly, the jobs market. The jobs market is getting very balanced here, guys. So everything very, very bullish. I was very pleased with this result, guys. If you have a chance, definitely go back and watch Jerome Powell's statement and the questions. You will see a tone that Jerome Powell has not had in the last year and a half, 2 years, finally acknowledged that they are getting the job done here. And if you want to take a look at the dot plot here real quick, you will see that this is what came out today here, guys. So we did have a slight decrease here. This is your 2024 expectations for interest rates. You can see that only 3 members are above the 5% mark, and most are between 4.5% and the 5% mark. This is a stark change to last quarter, right? In September, when we had a lot of Federal Reserve members, actually 10 of them, above the 5% mark. So your median drop, okay, is down from 5.1 expectations of interest rates in 2024 all the way down to 4.6. So that's about 3.25% 0.25 interest rate decreases over the course of next year. Your median for 2025 is down as well here, down 3.6% is the expected interest rate in 2025 from the Fed. And prior, this is the September read, was 3.9. So here you see in the 2 years that are upcoming, the medians that have been discussed from the Federal Reserve members are coming down. And that's most likely after having seen the data of inflation coming down, seeing the data of the economy slowing but still healthy, and seeing the jobs market back in balance. So very, very solid report overall. And we've predicted this on the channel, guys, that this was going to be the outcome. We had a Federal Reserve that was dependent on the data. And now that the data is showing them exactly what they want to see, they can start lifting their tone a little bit, being a little bit more bullish about their progress, being a little bit more bullish about the state of the economy as well. And in the process, potentially be able to decrease interest rates sooner than expected, rather than holding that very firm higher for longer that they've been kind of hitting us with for the past 6 months. So excessively good. And that's why the markets are absolutely on a tear today. Now, before getting into our major indexes, guys, let's get into ADOBE earnings. So what happened with ADOBE today? They were down almost 10% in the after hours here, guys. So it's a very, very, very negative reaction to very good earnings, in my opinion, from ADOBE here. So you can see pretty much from yesterday all the way to the close here, down almost 11%, but recovering slightly in the after hours. I did take a position, which I will show you guys at the end of the video here, took a position in the after hours, and we are up on that trade right away. So Adobe now pulling back, it pulled back exactly the area that I was looking for. You can see that the bottom of this hourly candle right here, take a look at this, guys. Bottom of this candle after earnings was about 565. Where is 565? That is exactly where the previous resistance, which is now going to be acting as support, is. So very normal that the price kind of bounced off of there. But Adobe looking very, very good on the long term here, guys. This was pretty much a weekly breakout pattern at this point. We will see how the week closes here, but this was just be pretty much a weekly retest, right? So breakout, retest of your previous resistance, which is now support, to the upside breakout further for 2024. And they gave very good guidance here, even though the guidance was slightly lower. A tiny miss on guidance was the reason for the down move, guys. But all in all, great earnings, and we'll go through those right away. Earnings, EPS up 3.28%, and they did have a beat on revenue by about 1% as well. On a technical basis, guys, Adobe has run a lot. I'm not gonna lie, it has run very much since the start of the year. You can see pretty much from the January candle right here, right? We have run, in the 90% range, pretty much bottom to top, right? So Adobe very, very close to all-time highs currently. The price is currently sitting around your 587, 590, right? So still about 15% off your all-time highs. But Adobe, I mean, they're just continuously delivering very, very solid annual recurring revenue growth, annual ARR growth in their subscription model, right? They pivoted to a subscription model all the way back here pretty much in 2016. And since then, the price has been absolutely exploding because it's a higher margin business for them. So you can see here, constant growth of revenue, and next year is going to be the same. Revenue for this year, they just reported the end of 2023, so you don't see it on this chart yet, but they're about 19.1 billion, so steady upkeep, and profit margins were in the high 20% range again. Quarterly basis, this entire year has been very, very, very beautiful. And on a forward basis here, guys, the trailing 12-month price to earnings ratio is about 57, but if you take it on a forward basis here, we're going to take a look here for 2024. So on a forward basis, end of 2024 earnings here, guys, they're about $18, which is very, very good EPS growth, about 11% EPS growth. So if you take their current price, right, which is about $590, divided by that $18 a share, they're trading only about 32 price to earnings ratio. So not that high, but not that low either. And they are close to all-time highs here. I was looking for a buyback here in the 560 area, 570 area. Didn't quite get that in the after hours, but kind of got pretty close. So happy that I was able to buy on a pullback here. So in terms of the earnings, let's get into them right away here, guys. Adobe shares slide on weaker than expected forecast for 2024. Title is kind of misleading, guys. We'll get into that right away. So here's the thing. Revenue grew almost 12% from a year ago in the fiscal fourth quarter. Very, very good. Net income increased 26%. 26% bump in net income. Excessively good. Here's the reason for the pullback, guys. Adobe called for 2024 earnings per share of $17.60 to $18 on 21 to 21.5 billion in revenue, right? So here's the thing. Analysts had expected a bit higher. $18 in expected earnings, which is the higher end of the estimate, but they expected 21.73 billion in revenue. So they're missing the expectation by about $200 million in revenue, guys. Not the end of the world at all. We're extremely confident about how that continues to be a growth business, and perhaps the pricing impact was overestimated here. So this was pretty much focusing on the Creative Cloud software bundle in terms of the cost that they were going into. They also have sorry guys, Adobe remains focused on closing the 20 billion Figma acquisition. So they have an acquisition in the pipeline here of $20 billion, which is currently being kind of blocked by the European Commission and the UK. So they're currently still underway. This is kind of the same conflict that Microsoft had when they were trying to buy Activision Blizzard, right? They're going through the antitrust laws. So these the European Commission in the UK doesn't want them to acquire them because it says it will have too much of a monopoly on the business that they're trying to do there. So as soon as this acquisition does close, guys, I'm pretty sure that it's going to do very good things for Adobe, similar to the acquisition of Activision Blizzard for Microsoft here, right? So it's just getting, it's just an agglomeration at this point, right? Adobe, very, very, very solid products. Now, if you want to take a look here at the breakdown here, let's take a look at the breakdown of their total revenues. All the numbers are very, very good. Here's for the quarter, right? So total revenue was $5 billion, 12% year-over-year growth on the total revenue. You can see every single revenue segment, guys, is up. Digital media segment revenue, 13% year over year. Digital experience segment revenue, 10% year over year. Experience subscription revenue, 12% year over year. Very, very, very solid numbers here, guys. If you take a look at the yearly numbers as well, same thing. Total revenue for the year, 19.41 billion. 10%, digital media segment, 11%, digital experience segment revenue, 11%, experience subscription revenue, 12%. And here's the kicker, right? Digital media ARR. ARR, once again, annual recurring revenue, almost $2 billion of net new ARR for the year. Very, very, very solid. And the company repurchased 11.5 million shares of the company here. Very, very, very good here. Repurchasing of shares by Adobe, extremely strong, generated 7.3 billion of cash flows from operations. Very, very good. And here we have a last few couple charts that I wanted to show you guys here. So here's the growth of the ARR. You can see very, very, very substantial growth. I apologize that you can't see the bottom of my head. Let me move myself real quick. So you can see ever expanding ARR. So annual recurring revenue, excessively good for Adobe at this point, right? Almost $15 billion in the quarter ending December 2023. So extremely, extremely, extremely good in terms of the year-over-year comparisons here, guys. Very, very good. 40% free cash flow margin. So every single metric in the company is doing a very good job at this point for Adobe. Once again, very solid company. No red flags, in my opinion, guys. Valuation, kind of a bit stretched since it's close to the all-time highs. Obviously, the dip buying sector was more down here. Anything in the lower 500s would be very, very attractive to me. Tough for me to buy in the 600s, but I'm happy I was able to squeeze out a few shares in the high 500s to ride potentially for next year. And the guidance, guys, the guidance for next year is going to be 10%. 10 to 12% revenue growth as well. So very, very good earnings from Adobe. Nothing really crazy about them, but nothing bad about them either, other than that slightly soft guidance of about $200 million on revenue for next year. That's it, guys. So a bit of an overreaction in terms of that in the after hours, in my opinion. So with that being done, let's get right into our major indexes here, right? So SPY absolutely ripping, guys. We are so close to the all-time highs at this point. And this is exactly what we were calling for on the channel. So nobody should be surprised at this point, right? 1.86% from the all-time highs. Why? Because we knew that inflation was coming down, and we knew that if inflation would continue to come down, the jobs market would continue to be tight, and the economy would continue to be strong. Well, we knew that the Fed was most likely bluffing about higher for longer rates. And that's what we've been calling for all the month of September and October. I was pretty much screaming on the channel that this was a very good and potentially the last buying opportunity for the year and for 2024. And now we have since significantly rallied ever since. So weekly uptrend is now confirmed. Bulls are in full control of everything at this point, guys, right? So look at this massive daily expansion right here. Any pullback at this point, guys, any pullback is just going to be for a lower high. Right? Any pullback, anything above 455 is just going to be for a lower high for daily price expansion further and further towards the all-time highs. We are going to crack the all-time highs, guys, most likely here. As you may well know, large institutions are not able to position in the hour and a half after Jerome Powell is done releasing the statement, right? It takes some time to deploy tens and hundreds of billions of dollars. So we are going to get some follow through on this move as institutions rotate and position with what the Fed just said. So keep an eye on that. I do expect momentum to continue towards the upside. Bulls looking very healthy, full control on the daily, full control on the weekly of this weekly uptrend as well. Targeting the all-time highs, 479.58-ish is going to be that area. And monthly, beautiful, guys. Monthly uptrend confirmed, monthly cup and handle as well. So everything is looking absolutely phenomenal for the bulls. No red flags whatsoever in this market and even in the macro now at this point. QQQ just continues to roar towards the all-time high as well. QQQ now very, very close to the all-time highs as well, right? We're talking almost about 0.86% from the all-time highs. So we're almost there, guys. Wouldn't surprise me if we do hit them over the course of this week as institutions continue to rotate into the market after what the Fed just said. So any pullback on the daily time frame here, guys, is just going to be for a higher low. Anything above 383, it'll be for a higher low touch and then retest to the upside here, guys. On the weekly, everything looking very beautiful. Weekly uptrend is confirmed at this point by the bulls. Not overbought territory yet, so they do have some room to move still. I would like to see the bulls crack the all-time highs, then potentially come sit down on them before the next move higher. Bulls in full control of everything. And on the monthly, guys, monthly cup and handle as well, right? This is pretty much monthly cup and handle, right? And coming off the lows here, we do have a beautiful, beautiful monthly confirmed uptrend as well. So bulls are in full control of every single time frame at this point. Macro is bullish as well. So you guys are going to start to see me play a bit more call options on the channel. This is what I was waiting for. I was waiting for the Fed pivot. Now is the time that we find undervalued, mispriced stocks that have missed out on this rally, and we are going to probably do call options on those stocks. So keep an eye out for that, guys, coming on the channel soon. XLF financials, absolutely killing it today, 1.61% to the upside. That was expected because these are highly rate sensitive stocks. So it goes to figure that if rates are potentially coming down, financials are going to be doing significantly better. So breakout here by XLF, we actually broke our resistance area, guys. Look at this clean break of your 37 mark. This has been the resistance here for the past year and a half, guys. So this is very significant. I would like to see the bulls come and break this and then sit on it for a retest before putting in another leg higher here, guys. And that is expected. That's what I'm expecting is going to happen as well. So we are through the resistance at this point. Any pullback at this point is going to be for a higher low above 35.75 for a daily higher low for further price expansion to the upside at this point. On the weekly, looking very good. Bulls, no sign of slowing down yet. Not even overbought on the RSI. So they do have a bit of room to move here, guys. We are going to be targeting further price expansion into the 38, 39 level, all the way up to this guy right here for potential a sit down and then rally into 2024. XLF bulls looking very good, and we're going for the monthly breakout. This is almost a confirmed monthly uptrend, guys, right? Almost. If we can close the month of December at this point, higher than this resistance area, will be a monthly confirmed breakout on XLF as well. Have not had a confirmed monthly uptrend since 2021. So a while, right? So very good by the bulls. XLV Healthcare, look at this massive day on healthcare, guys. 1.84% to the upside. Bottom to top, guys, I'm pretty sure this is about 2%, right? 2.3%. Bottom to top here. Healthcare, which was lagging for a long time now, is definitely playing catch up at this point. So daily uptrend simply continues. Very, very, very simple technical analysis right here, guys. We're running into a current area of resistance. 136.84 area, 130 high 136 is going to be your area of resistance. And after that, guys, it's pretty much the all-time highs. The 140, 141. So after we get through these guys right here, which I'm pretty sure we'll be able to make quick work of them as well, we're going to the all-time highs on XLV Healthcare as well. So smooth continuation of the daily uptrend. Any pullback at this point, just for a higher low of 130, 130, higher low, and then potentially price expand higher if we can't get through this resistance area in one clean shot right now. Well, we may have to two-step it, and that's fine. The bulls have tons of room to move. And on the weekly, guys, this is just one weekly big move up. We've now engulfed the past 3 legs of selling in one clean V-shaped move. So any pullback on the weekly, guys, higher low for price expansion for the weekly uptrend, similar to what the rest of our indexes have done. And on the monthly, I'll show it again, guys. Any breakout of this current level, you will also potentially get a breakout of their monthly uptrend, and then it's off to the all-time highs and beyond for 2024. Have no doubt about that. So the market is looking fantastic right now. ADOBE Russell, 3.4% to the upside. Absolutely massive day, guys. Bottom to top, 4.15%. An absolutely ridiculous day here, guys, on the Russell. The Russell has obviously been lagging behind the rest of the markets. You can see that. Russell is still significantly off the all-time highs despite the most recent rallies. Still about 21% off the all-time high. So growth stocks still fairly cheap in relation to the rest of the stock market, but you still got to be a bit careful. We're not out of the woods yet, but could be a very good time with this Fed pivot to start looking at some growth stocks, and that's exactly what I'm going to be doing over the next week or two in terms of positioning for the next year here, guys. So very healthy daily uptrend as of currently, right? Any pullback is just for a daily higher low. Anything above 183.51, higher low for future price expansion. Daily uptrend is in full control by the bulls at this point, approaching our area of resistance, guys. So we'll be able to break it just like financials did. 200, right? Roughly 195 to 200 is going to be that 2 years worth of resistance here, guys. Very crucial that the bulls get through this. If they can't get through this in one clean shot like financials is doing right now, well, we may have to two-step it. If we encounter some resistance, pull back. The bulls have tons of space. Anything above 162 just for a higher low for a second leg up to potentially smash this resistance area. And if that happens, guys, the Russell is also going to be in a monthly breakout uptrend here. So keep a very close eye on the Russell. The Russell is your lagging sector. So going to be looking for some opportunities on some growth stocks. And now lastly, the Dow Jones here, guys. Dow Jones performing very, very good. Very, very good. So good that we just hit new all-time highs, guys. So your previous all-time highs, 36,952. And now closing 37.90. Very, very good by the Dow Jones here. Beautiful all-time highs, right? So daily uptrend continues excessively solid by the bulls. Any pullback at this point, guys, just for a daily higher low, anything above 35,600, daily higher low for further price expansion at this point. Weekly is in full bull control as well. Not even overbought on the RSI just yet. So any pullback as well on the weekly would just be for a higher low for further price expansion to the upside at this point. And now we will have the all-time highs to sit on, right? So if we do pull back here, right, keep an eye on your previous all-time highs. I have to scroll back a little bit away here. So if we do pull back here, keep an eye, guys. 36,600 all the way to 37 is going to be the target area to potentially pull back into before another leg up. You're going to be using those previous all-time highs as support this time. And now obviously your monthly breakout is absolutely confirmed here. New all-time highs, monthly uptrend. So bulls control everything. Control the monthly, control the weekly, control the daily. No red flags whatsoever. Just slightly overbought here on the daily RSI, but just leaving a little bit of sideways consolidation could bring that net down as well. So very, very good performance by your indexes. Few all-time highs, few more on the horizon. Keep an eye. SPY and QQQ almost there. Now let's take a look at big tech here, guys, before getting into my portfolio. So big tech, Apple also very close to all-time highs, guys. All-time high previously, 198.23. This guy right here, almost there, right? Almost at 128 today. So Apple with the continued breakout, daily uptrend just continues. We were looking for the daily higher low. I was saying yesterday, we most likely got it here, 191.65. That was the case. New daily uptrend simply continues at this point, right? No red flags at all. Any pullback is just going to be for a daily higher low, anything above 191.50. Daily higher low, further price expansion. Bulls in full control at this point. We are eyeing the all-time highs at this point, and Apple's weekly momentum is most likely going to get them there here over the next couple of weeks. So weekly uptrend is confirmed as well. No red flags there as well. We're in full bull mode, right? Can't even gauge for a weekly pullback until the bulls lose this daily. So very, very good price expansion on the weekly by the bulls. And on the monthly, guys, almost monthly uptrend. Break the all-time highs, you have your monthly confirmed uptrend on Apple as well. So very, very good performance, guys. Tough for me to buy Apple at these levels right here. I would be personally waiting for a pullback, but we may not get it, guys. Right, so very, very tough. Won't be able to see if I won't be able to buy this before it cracks the all-time highs. I'm more of a breakout or retest type of guy. So if we break the all-time highs, then pull back into this area, I may be doing some short-term puts in terms of wanting to buy the stock under the previous all-time high. 190. I'd like to get as close as possible to 190 as possible, but not going to push it. AMD also performing very well on the day, 0.42% to the upside, getting a slight bit tired here, most likely here after their news that they were releasing competing products with NVIDIA. AMD absolutely rocketed, and now we are running into a bit of resistance potentially here, guys. So little tiny bit of resistance area up here at the 140s, right? 140 all the way to pretty much 150s is going to be this zone to watch out for. On the daily, we are quite extended here on the RSI, so any pullback is going to be very, very healthy for price action. Anything above 116.76, just a pullback for a daily higher low for further price expansion here, guys. Daily uptrend is full control by the bulls. Weekly trend is full control by the bulls as well. If we do pull back here, guys, target the previous 52-week highs, right? 132 down to pretty much 130. This whole pocket right here should be the area where the bulls can safely pull back into before potentially setting another leg higher as well. And on the monthly, guys, I'll remind you, and AMD is currently full monthly bull breakout mode at this point. Monthly uptrend is confirmed. So bulls in control of everything. So even if we do pull back a little bit here, guys, very, very healthy consolidation. I will most likely be throwing some options at AMD if we do come down here, 130 to 128. Very, very good. Amazon almost up 1% and almost breaking out of their current resistance pattern here, guys. So we've been stuck here. We've been stuck here for a big while, but I do think in the next coming days, next week, Amazon's going to be able to crack this to the upside. And this was the bullish lean we were talking about yesterday in yesterday's video, right? If everything continues to be good in the whole macro environment, I do think that Amazon is going to break this range with a bullish lean here. So that's exactly what's kind of shaping up. We've been coiling up, tightening up, and now Amazon making a run for it. If we do start break to the upside, guys, very clear weekly uptrend will be in motion here. So that's what I was looking for, a weekly bull flag into potential price expansion to the upside here. If we do get a second leg up here, target very, very simple, guys. 165 to 170 is going to be the nice target. So this is going to be a fantastic leg to the upside. We're talking roughly a 15% leg to the upside here. Not much resistance before the 165, 170 area. So keep an eye on Amazon, about to break out here, guys, right? The bears inability to come down too much in the 145 to 140 support zone here was pretty much the red flag for any bears out there, right? So not able to break it to the downside. So now the bulls are most likely going to take this higher. Not currently positioned in terms of short-term trades for Amazon, but that could be a little nice short-term trade here with a stop loss below the 140 level and profit targets to 165, 170. Good risk reward on that. Now moving down to Google. Google coming back ever so slightly here, guys, today. So we were waiting for Google to kind of bottom out after the AI news, and then they pretty much filled the gap after that, right? So coming back, filling the gap. Now we're going to be looking for the daily uptrend, right? So we were looking for a higher low. Anything above 129.50 was going to be higher low, looking for the higher high at this point, right? So can Google get it done? I'm going to need to see a break of 140 pretty much to get this daily uptrend in motion after Google pretty much lost the daily uptrend right here. We are now fighting to get it back, right? So Google's still looking very, very solid here, guys, right? On the weekly, it does look like a potential weekly inverse head and shoulders formation. So this usually does break bullish. On the weekly, I'll remind you as well, just looking for a weekly higher low, anything above 121.79, just for a weekly higher low. For the weekly uptrend set, we lost the weekly uptrend here on Google. Now we're looking to get it back. So price performing very, very good, hugging your 12 weekly EMA, this yellow line right here. So you can see bulls are holding on to it for their dear life. I wouldn't be surprised if Google does follow the rest of big tech and follow the rest of the market. We do start having some price recovery here on Google, but no red flags as of yet here, guys. Even on the monthly, I'd like to see them close a strong month of December and into January, really set this monthly uptrend in motion. But as of now, guys, no red flags whatsoever. The bulls very, very well set up on the weekly. Not recaptured the daily just yet, but Google is one of those that is kind of trailing behind the rest of big tech at this point in terms of the most recent price action. So it remains to be seen, can they do it? I do still have those 100 shares that I have been swing trading here from the 134. So we'll see if we can get a pop back above the 140s. Now moving on to Meta. Meta having another good day here, guys, up 0.16%. They were up a bit higher, but pulled back pretty much intraday, but Meta doing exactly what we wanted it to do, right? Reset of the daily uptrend, so love to see that. Meta lost the daily uptrend right here when they sacrificed this higher low position right there. So they kind of lost the daily uptrend. Now we've been looking to recapture it. And that's exactly what the bulls have done. So really, really solid work by the bulls. Any pullback at this point, just for a higher low, anything above 320, just looking for a higher low, potentially rally further on to our new 52-week highs here, guys. We do have the moving averages, which will now be support. And this is a very beautiful area of support as well. Not expecting the bulls to lose this in such a bullish macro environment. On the weekly, guys, Meta has always looked very good, right? We are just looking for a weekly higher low for further weekly uptrend continuation. Beautiful weekly uptrend here by Meta currently, right? So anything above pretty much 314, right? Still just looking for that weekly higher low. If you crack your 52-week highs here, 342.51, weekly uptrend continuation is in motion. On the monthly looks very good, right? Monthly looking very, very bullish. Monthly uptrend indeed as well. Your future resistance areas, if we do break your 342 level, keep an eye, guys. Your resistance area stays put 352, then it's your all-time highs. 384. So only a couple left to go before Meta has fully recaptured everything at this point. After a very brutal 2022, Meta having a phenomenal 2023 V-shaped recovery. And now Microsoft actually pulled back on the day when the Fed was speaking here, guys, but that's okay. Microsoft has been in a very, very beautiful setup here, guys, right? So on the daily, yes, they did lose the slight pattern of daily higher highs and higher lows here. They lost the daily uptrend ever so slightly, right, with this move down here. But now Microsoft has kind of been coiling up and now breaking it to the upside. So we're still looking for Microsoft to continue this daily uptrend right here. Need a break of 384 to really, really, really get that in motion at this point. Line in the sand level for me is for 363.41, right? Lose 363.41. The bears could potentially set a daily downtrend here. That would be fine. It would just be more weekly consolidation. The weekly chart is my favorite for Microsoft currently right now, right? You can see beautiful weekly uptrend, just looking for a weekly higher low for further price expansion. No red flags on Microsoft, just tough for me to buy it at the all-time highs without much of a dip here. I would have preferred to see a dip between 355 and 340. If ever we get that, for ever which reason, guys, I will be looking to add Microsoft shares in this area as is previous resistance from the all-time highs. But Microsoft currently beautiful on the monthly chart. Beautiful chart on the monthly breakout, right? Monthly uptrend as well. On the weekly, very good, just looking for the weekly higher low. On the daily chart, right, still a bit of a mismatch here between bulls and bears, still fighting down in this lower area, but I would not be surprised if Microsoft is able to recover and make a push towards the all-time highs again. And now NVIDIA, very good day today, 0.9% to the upside here, guys. Kind of looking like Microsoft, right? So the bears had the daily downtrend. Quick recap here. Now the bulls have recaptured the daily uptrend, right? Higher low and now higher high again. So very, very good move by NVIDIA now at this point. Any move below is going to be looking for a higher low, 458.54, right? To just continue this daily uptrend to the upside. Big, big, big levels to watch. 450. Can't have a break of 450, guys. For a break of 450 would mean potentially that the weekly consolidation is still not done. Weekly uptrend was looking very good, just looking for a weekly higher low and then further price expansion. So I am expecting NVIDIA to continue to break bullish at this point. Why? Because on the higher time frames, the bulls are in control. So we are expecting that next leg of bull follow through here. NVIDIA obviously with great earnings, their forward price to earnings ratio is looking very good for next year as well. So will they be able to sit on this 463 level that we just had, right? Sorry for the non-straight line. You have your 12 EMA, this yellow line right here that acted beautifully as support. So now I'm expecting bulls to pretty much rally off these lows right here and continue this monthly uptrend potential with a very bullish end to the month of December. So we'll see what happens on NVIDIA. Now moving on to Tesla. Tesla with a great intraday recovery here. Tesla testing the lows, potentially taking out people's stop losses down there. Testing the lows, got all the way as low as 228.62 and ending around 239 here today, guys. So slight little dip, but still within the range here, guys. So very, very, very brutal technical range we've been in pretty much for the better part of the last month at this point. But with after today's data and interest rates potentially coming down next year, that's very, very good for Tesla, right? It's going to stimulate Tesla's demand potentially. So looking forward to a potential rally here on Tesla as it is an interest rate sensitive stock. So the lean is still bullish for me on Tesla for this break of this range here, guys. Need to see a break and hold above 247. And at that point, we would be targeting overhead resistance in the 260s. So a break of this range would be very good to the upside. They broke it to the downside, but we're not able to close down there at all today. So we will see how Tesla plays out. I'll remind you, Tesla deliveries are at the end of the month on pretty much the 1st of January. We're going to get those here, guys. So keep an eye out for Tesla deliveries as of now, looking fairly bullish. And on the weekly, guys, weekly is looking very good. This is a weekly bull flag, right? Not giving back too much after this massive move to the upside, consolidating sideways, expecting a weekly uptrend formation at this point on Tesla here, guys. So that is what I'm betting on essentially, right? But if for any which reason we pull down into this range, no real red flags, guys. We still have a bit of room to give back on the weekly. It would just be further weekly consolidation, looking for that weekly higher low for potential rally here into January. And I am going to be a buyer of Tesla. If we get any significant dip here into the 225 down to 210 range, I'm definitely going to be looking to pick up a few contracts. And now our two last ones, Palantir and PayPal. Well, Palantir, very nice move off the bottoms here. Palantir, I was saying the line in the sand level for me remains 1706 as of yesterday's video, guys. Why? Because we were looking for the continuation of the daily downtrend. Daily downtrend was here on Palantir, but now the bulls have said no. They don't want to break this area. 18 to 17 has been a very, very strong area of support in the past, which I've highlighted in the past videos. Why? Because it was previous resistance here for a while. So you had a nice little channel to base the move off of 18 to pretty much 17. Sorry for my squiggly lines here, but you guys get the idea. On the weekly chart here, guys, weekly chart was looking very, very, very bullish here. Just looking for weekly higher low for further price expansion to the upside. Nice defense of this 12 EMA, this yellow line here by the bulls, looking very, very, very healthy indeed. On the daily, going to be looking for a potential daily uptrend recapture by the bulls. Need to see a break of 1830. 1830 would mean we have a new daily uptrend, right? After setting a very high, nice little higher high here, higher low ever so slightly. If we do get a break, it would be a daily confirmed uptrend at that point, guys. And then your weekly higher low would be in, and then we're going to be looking for price expansion all the way up to $20, $21 area as well. So very, very bullish on Palantir. This was a very, very decent dip opportunity. I'll remind you, off the most recent highs, we're talking almost 20, 21%. Still a fairly decent dip opportunity, and I do have some put options open for Friday. So we'll see if we can cash in on those or if we get assigned the stock. We'll take a look at that in the end of the video. Very good move by Palantir here. Still in a decent dip buying opportunity in my opinion. And now PayPal. Finally, we talked about this yesterday and the days prior, right? Very, very, very tight range, coiled up kind of like the Russell. And with the bullish lean, with the rest of the market being bullish, and now Jerome Powell commenting on rates potentially coming down, PayPal is an interest rate sensitive stock here, guys, right? So now PayPal with the channel breakout and breaking above this previous area of resistance, which we were trapped in here. This whole area was just absolutely nasty area of resistance. Big congestion zone right there. You can see we're now breaking clearly through it. 5% of the upside on PayPal. Next target remains 64 to roughly 65.73 is going to be your next target of resistance here. Very good job by the bulls confirming the new daily uptrend. At this point, any pullback is going to be for a higher low. Anything above 57.57 is just looking for a higher low for further price expansion. So now bulls can actually come back down, sit on this previous area, which is also my green box, sit on the area and potentially rally to new highs once again here, guys. I'm getting fairly close to my break even, so looking forward to being able to write some covered calls on PayPal after the big rally here. And on the weekly, we're looking absolutely fantastic here, guys. On the weekly, let me just load up a bit for you guys because PayPal is kind of so crushed that the chart doesn't allow you to see properly, right? So weekly move is doing very good. Now this most recent weekly sellers leg down here, we're now recapturing a decent amount of it here, guys. Whoops, that's the wrong one. So on the fib, let's put the fib retracement on it, right? Why do I want it to get back up to around the $62 range, which is where it is right now? Because that is this blue line right here. And if you can't read, that's 80%. This is your 786 retracement, so almost 80%. So now we've recaptured almost 80% of this seller's leg down. So looking very good. Any pullback, just going to be looking for a weekly higher low for a new weekly uptrend. Same thing that happened back here. So very good momentum by PayPal, recapturing your 12 EMA on the weekly chart here as well. And the 26th, the orange line, potentially recapturing that as well. So very good confluence happening here for PayPal. Everything working in the right direction. Going to be looking for price targets here, $64, $65 range before a potential pullback here, guys. So looking very good on PayPal. Congratulations to everybody who bought the dip in here over the last 3 months. You should be in nice profit now. And now, guys, let's get into my portfolio. So guys, taking a look at my portfolio performance here, year to date, we are doing very good after today's performance as well. So 57.64% here on the year for the portfolio. Keep in mind, we have withdrawn about 15% of the portfolio as well. So that would put us close to 70% year-to-date performance here. We will see how well we can perform leading into December 31st here. Should be a very good year here of beating the markets. Once again here, guys, pretty much been doing this for the last trading for the last 10 years, but running this put wheel strategy for the last 5-6 years, and it never fails to create some very substantial gains year over year, as long as you trade the strategy properly. Now, as well, the S&P 500 here, you can see that they're only up about 21% on the year. After today's performance should be about 22. So we are roughly 2.5x the S&P 500. And in terms of the NASDAQ, we are now really distancing ourselves from the NASDAQ as well. NASDAQ currently about 41%, and we are currently standing at about 57.64% here. So really outperforming the NASDAQ as well without buying and holding any of your big tech stocks for the entire year. I'll remind you, NVIDIA up 200-something%, Facebook up about 140%, Apple up about 57%. So all of big tech has had a phenomenal rally, and we've pretty much matched and surpassed the NASDAQ without buying and holding any of them, just from running the put wheel strategy here. And in terms of the actual positions here, guys, let's go through them really quickly. So Palantir, you see that I still have my 6 contracts open here that I wrote for an average price of about 32 cents. They're now trading about 14 cents. Palantir still above 17.5. So we will see if they are going to close above 17.5. If they close below, I will be assigned 600 shares of Palantir. Looking forward to being assigned the shares if ever that is the case here, guys. I do believe that we are going to have a very good 2024 on Palantir. Rivian still have the 19.5 calls here, guys. So you can see that we wrote them for about 64 cents, and they're currently trading about 54 cents. So we have made a bit of money on the covered calls, but Rivian, I'll remind you, Rivian currently now trading. They had a very good day after the interest rate decision here today. So 19.68, we will see if we get assigned here, or sorry, if we get called away. We have 200 shares of Rivian. We'll see if we get called away on Friday, or if tomorrow I'm going to roll the options. Hint, I'm probably going to roll the options and get even more premium for next week as well. My break even on Rivian right now is currently standing about 1670-ish. I don't know why the drawings erased on the chart here, but we'll bring that up in tomorrow's video as well. In terms of the rest of the positions here, CLH, you can see that CLH, we wrote these contracts here, the 4833s for about 45 cents. They are almost worthless. CLH had a very good day today here, so we will not probably be assigned the 4833 strike on Friday here, currently trading about $52. So nice little profit on those as well. The Dollar General 123s, we wrote those for 75 cents here. You can see that they are currently trading about 10 cents, fairly off the lows here is Dollar General. So Dollar General, nice little pop back above to 130. I highly doubt that we get assigned at 123 on Friday. So we're going to be taking profit on those as well. The Oracle 99 puts that I wrote yesterday, well, wrote them for about 39 cents. You can see they're all the way down to only 5 cents. So those are pretty much worthless, as well as Oracle had a very decent day here as well, up to about $103. So remains to be seen if we'll be assigned at 99 on Friday or not. I wouldn't think so here, guys, but Oracle in a very, very juicy opportunity for some dip buying right now. Starbucks, we wrote the 97 puts towards the end of the day here. You can see 22 cents is what we got for them. Only 2 days left of trading. I wouldn't mind being assigned Starbucks down here anywhere $100. Under $100 is good for me. I do think that we recover into the $100 mark. So I did write the 97 puts here, guys. The 97 puts are pretty much right under today's day. And I don't think that Starbucks is going to trade back lower to 97 or below before Friday. But if they do here, guys, I will gladly take those shares, because you can see this has been a very, very, very good area of congestion in the past. Obviously, it's broken down below a little bit, but for the most part here, guys, price seems to really like the $96, $97 range as a base of support here. And UPS still holding the 157.5 call, so we'll see if we get a sign or call away on UPS on Friday. I'll probably roll them again. Got $1.60 for them last Friday. Currently trading at about $1 UPS. Very close to my assignment price here, guys. 157.50 is the mark. So we'll see tomorrow. Tomorrow is another green day. We might pass 157.50. And at that point, I will be rolling my calls to next Friday, potentially for another $100, $150 in premium for next Friday as well here, guys. Looking to ride UPS all the way into the 160s. UPS has been very kind to me. Our break even, not sure why it's now erased on the chart, but our break even is roughly around $144 all the way down here. So it's been a very, very good ride so far on UPS. Can't complain at all. And you can see here, I did take a few trades in the after hours. Actually, only just one. And I didn't show you guys the Oracle trade. So we do have 7 shares of Adobe in the after hours. Adobe, we picked it up for $585. You can see we're up $10 a share on that. So roughly up about, $70 or so. Decent little after hours trade. We'll be riding this into the 620, 630 range before I cut. If not, I may just maintain the position here, guys, looking bullish. TMF, still in TMF. You can see my average cost here, 56.11. They're up to 61.65. Probably will be trying to throw a call option or two with the 20-year yields here, performing very, very nice. So remains to be seen when I do that. Most likely in the next week, guys, I'll be positioning a few call options here for the next week to be forecasting that rates will be coming down on the 20-year yield here in terms of over the next year. Oracle is the trade that I took after earnings here. When they had their earnings after hours dip, I bought 50 shares at 107, and you can see the price is 103.40 now. So pretty much we're underwater here by about $213, but that's okay. I also opened a few trades on Bitcoin and Ethereum the other day. You can see those here. These are ETFs, as a matter of fact. So only very, very light here, guys. Only about $500 in exposure each. So that's pretty much 1%, less than 1% of this entire portfolio's value. Small position, and I got a very good price on them. I actually timed almost the bottom. My cost, $947 on ETH and $740 on Bitcoin. So if you look at those ETFs, that was the dip the other day when Bitcoin and ETH had that big dip. So 947 on Bitcoin is pretty much the low of that dip right here on this on this ETH ETF. And on the Bitcoin one here, guys, you can see the low of the dip was pretty much 737, right? And we got very, very close to there. We got about 739. So I really bought the dip aggressively in terms of price on those two, but went fairly small in case we do have more weekly and monthly consolidation on those. Still have my BABA, but I will potentially be doing leap call options on them potentially tomorrow or the day after, so keep an eye on that. Still have my CP shares, really like the position on those. They're almost up to $75 again, got in at $71.90. Still have the Google shares, 135 break even, 133.85. So we'll be looking to play price recovery on that as well. The UPS, the PayPal obviously coming very, very nicely. Got those 66.59, break even is about 65. So we're almost back to break even. Rivian is down here as well. CSIQ recovering very nicely here, guys. My average on CSIQ is about 28, so not high enough for covered calls yet. And now my Canadian banking ETF, almost back. Average cost, 1968. We're almost back to break even here, guys. Very, very good performance. Pretty much everything recovering. That's the narratives that we positioned for here, guys. That's the trades we took. And now we are collecting the profits now that everything is all said and done. So that's pretty much all that I had for your video here today, guys. If you liked it, consider subscribing to the channel. We're almost at 500 subscribers here, guys. Almost so close, about 495 of you subscribed. I love every single one of you. Thank you very much for doing so. If you liked the video, if you learned something, consider dropping a like. Helps me out for the algorithm. And as always, Any questions, guys, leave them down below in the comments here. Macro, TA, options, stocks, anything you want, I got you guys covered. So I'll see you guys tomorrow after the close. Hope you guys had a wonderful day. Take care and peace.